How am I affected with 150 units and over $45 million at risk when Biden comes in and states that he's going to have rent control of 5% annually? All right, Biden's rent control. How does it affect investors, ladies and gentlemen? That's the big question for the day. And as I pull hundreds and hundreds of units of multifamily out of the ground, how does it affect me? And how does it affect all of you who are syndicating, have ownership groups, investing in single family and multifamily investments similar to this one right here? This is a 150 unit apartment complex breaking ground in less than 30 days. This right here, ladies and gentlemen, is a $45 million product. Now, with that said, how am I affected with 150 units and over $45 million at risk when Biden comes in and states that he's going to have rent control of 5% annually? With that said, ladies and gentlemen, one of the biggest things is, what is this 5% rent control that Biden is actually doing right now? And how does it affect the market for investors? One of the big things is the national average. And watch, follow me here, ladies and gentlemen, because there's a better way. At the end of this video, I'm going to explain to you guys as we move through this, the better way to have more affordable housing in lieu of what I am recommending versus what Biden and his administration is recommending. Now, in theory, for homeowners and for people that are renting and people that are going out and seeking rental homes or apartments for rent, in theory, it sounds very, very attractive. Now, that's in theory, and here's why. Because, ladies and gentlemen, if I explain to you guys that the national average for rent growth nationwide runs between 1% and 3% annually. So if we take an average of 2% annual rent growth nationwide, that is the national mean. That means the national average of rent increases nationwide. So if Biden is going to do rent control and is offering a 5% maximum rent increase, I'll take it as an investor all day long and all the way to the park, because if I can bank on 5% increases annually, we will be hitting home runs in value all the way from here to the bank for the next decade if that holds that long. Now, the reason why is because when we go in and we raise the rates 5% every single year, after 10 years, you are just shy of doubling your rent rate from where you are today. Or you have a second option. You can leave rates right where they are, have minimal rent growth between 1%, maybe 2%. Owners are still happy because rents are still growing, values are still going up. Or we can go in and the feds can lower interest rates. And what this does for the actual investor is it increases the asset value with current rent rates and no rent increases needed. So if you guys want to reward the developers, we the developers will take it. I'll go to market and I will build these bad boys all day long, gladly. But then you got to talk to your administration and ask them why. Why you allowed 5% rent growth and why you're bleeding at the table financially every single month because of the rent growth increases and premiums that your legislators went in and approved. So in theory, it sounds good, but the reality is it doesn't do anything for you, the end renters, the end users, but it does a lot for people like myself and those of you guys syndicating and all of you investors out there. So we can go out and support Biden's rent control if we'd like to. I'm happy to support it. That's one thing that Biden has done that I am happy to support. But if we really want to go after affordable and attainable housing, let's lower interest rates because investors will be happy, values will go back up, lending will become more available, rent rates can stay where they are with modest increases, keeping affordability in the pockets of the end tenant and renter as opposed to the investor. Both the investor's happy because interest rates have lowered, values have went up, and the tenant is happy because rent rates have stabilized and the value of their dollar continues to work in their favor. Now, ladies and gentlemen, there's a lot of moving pieces to this. And as an investor and as a syndicator, one of the biggest things that we need to advocate for more so than anything is more affordability of the cost of money right now. With the compression in cap rates and the lower of interest rates and the expendability of $9 trillion that entered the market during the pandemic, we sit at a place right now where the affordability to get products like this out of the ground doesn't exist anymore. It's extremely challenging and hard to be able to get this type of product out of the ground. With some strategic financing and partnerships and relationships with lenders, with equity partners, and with the knowledge and wisdom to be able to build efficiently, we're able to get products like this out of the ground. But for the vast majority of people that are looking at products like this to get out of the ground, I tell them go small, don't go big. Most times I tell them the biggest regret I made when I was younger was I didn't go big fast enough. Today, I'm telling you guys, go smaller and go more profitable. The big product, as expensive as money is today, is less attractive from a financial return standpoint short term than the smaller products. Now, we're a long-term investor and we're a long-term builder. So I'll build these assets for free all day long because our books sit differently than the vast majority of people. We don't need this for the cash flow today, but we'll take it for the upside profits and the larger valuations tomorrow. 5 years down the road, we'll have a heyday in profits on all these assets and properties. But for today, for you as the investor, invest in units that are under 30 right now. Anything between 8 and 30 is a sweet spot in the market today. You can build for less. It's less expensive. You can use residential contractors to build a commercial asset without having to get into commercial and more sophisticated contractors. And you can build a product like this for a lot less money and a lot more upside. So for investors today, the smaller the project, the better. Just don't go too small, because too small is no good when you're coming to large profits. 8 units as a small base and go to 30 units. Resume up by buying land, building houses, get into multifamily housing for the tax benefits and cost segregation to go out and take advantage of the #1 federally approved tax credit that you can get for income taxes, and that's cost segregation on real estate. Ladies and gentlemen, affordability is in the hands of you, the investor, and the feds. If we can get the feds to lower interest rates, and we can go in and make more affordable housing for the vast majority of the United States. For more videos just like this, click and subscribe to our YouTube channel. Smash that thumbs up button. I'm going to recommend a how to buy land and build multifamily apartments after this video. Click, watch, and learn, and continue following our content. We'll see you next time. Click and subscribe.